And I imagine that must be really difficult when you're crossing over periods, whether it's fiscal or year-end calendar periods. So if you have a certain percent met by the end of the year, but the whole project isn't complete, well, yeah, you got your, let's use that example for the kitchen. You got the 30,000, maybe hit the 50% mark in December. Well, okay, you're recognizing 15 now. You're going to recognize the next 15 or 50% in the next fiscal year. So it's important to do that.
Exactly. And the really key thing is when you estimate the cost of the project before you start it, you want to make sure those estimates are really bang on and accurate. Because if I estimate that kitchen's going to cost me $15,000 to complete, and that 15,000 is going to cover my labor, my material, my overhead, my profit, all of those components, and then I get a month into the project and I go, oh my god, I didn't price in this tear out component, or I didn't price out, I didn't have this electrical setup, or the plumbing. So now all of a sudden, I estimated the cost is going to be 15,000 and now the cost is 30, and at that point the project's not making any money.
And that's hard to go back to the customer too. And then you got to price the whole percentage of completion. If there's more midterm, I assume like in that case, if the price goes to 30 to 45,000, then you just work your same percentages utilizing the new number, I imagine.
Exactly. Yeah. So you'll adjust your estimated total cost. That's typically called a change order. So it would be an adjustment to the contract value and then an adjustment to the budgeted total cost of the project. And then once those new data points are in, you redo your percent completion based on your new total cost compared to the revised budget cost. And then that's the amount of revenue. That percentage is the amount of revenue you'd recognize over that same time period.